Welcome back to the channel. I'm Algabot, and today we're breaking down a MetaTrader 5 expert advisor called the Engulfing Pullback Continuation strategy. This is a pure price action system, which means it uses no moving averages, no relative strength index, no average true range, and no oscillators of any kind. It reads the raw candles directly. Instead of fading exhaustion at a top or bottom, it treats the engulfing candle as a continuation trigger, buying shallow dips inside an uptrend and selling shallow rallies inside a downtrend. By the end of this video, you'll understand exactly how it spots the trend, times the entry, and places its stop and target. Let's start with the big picture. The Engulfing Pullback Continuation expert advisor is built around one of the most recognized candlestick patterns in trading, the engulfing candle, but it uses that pattern in a way many traders overlook. The classic textbook approach treats a bullish or bearish engulf at a swing extreme as a reversal signal, a place to fade the move. This strategy flips that idea on its head. It uses the engulfing candle as a resume signal, a confirmation that a brief pullback is over and the dominant trend is taking control again. What does that mean in practice? When the market is climbing, price rarely moves in a straight line. It pushes up, pauses, dips back a little, and then continues. This EA waits for that shallow dip, then waits for a strong bullish engulf to fire, and treats it as an invitation to join the existing uptrend. The mirror image applies to downtrends, where it sells a shallow rally that gets engulfed by a strong bearish candle. Because there are no indicators involved, everything the strategy measures comes straight from the candle data itself, the open, high, low, and close of closed bars. It defines trend structure by comparing two equal windows of bars and checking for higher highs and higher lows, or lower lows and lower highs. It measures how shallow the pullback is as a fraction of the recent leg, and it sizes its stop loss and take profit as fractions and multiples of the signal candle's own range. That design choice is important because it means the strategy auto-scales to any symbol and any time frame without needing point sizes or volatility readings. This is an educational breakdown of a trend-following, price action approach. It is best suited to traders who like clean, rules-based logic and who want to study how structure and candle patterns can be combined. It naturally fits trending instruments such as stock indices like US 500 or GR40, or a trending currency major on the 15 or 30-minute chart. Now let's walk through the exact logic step by step. The strategy only acts once per freshly closed bar. The still-forming bar is ignored, so every decision is made on completed candles. It looks at two specific bars. The signal bar, at shift 1, is the candle that just closed and carries the engulfing trigger. The prior bar, at shift 2, is the bar being engulfed, which represents the pullback. Before anything else, the EA checks the quality of that signal candle. It measures the candle's full range from high to low, and it measures the body size, the distance between open and close. The strategy detects a decisive close by requiring the body to be at least the MinBodyFrac fraction of the total range, which by default is half. This filters out indecisive, doji-like candles with fat wicks on both sides. It also requires the signal body to be dominant, meaning at least the engulf factor multiple of the prior body, which defaults to 1.10 times larger. Next comes structure. The EA scans two equal windows, each TrendLookback bars long, 8 by default. The recent window covers the most recent bars, and the past window covers the block before it. An uptrend is confirmed only when the recent window makes both a higher high and a higher low than the past window. A downtrend requires the exact opposite, a lower low and a lower high. Then the strategy checks that the pullback was shallow. For a long, it measures how far the dip retraced the recent upleg, and that retrace must be no deeper than MaxRetrace, 70% by default. This keeps entries with the trend rather than at a full reversal. For a long entry, all of these must align. The trend is up, the prior bar is bearish, the signal bar is bullish, the signal body engulfs the prior body, and the dip is shallow. When that happens, the EA buys at the ask. The stop loss sits just below the signal low, offset by stop buffer frac of the range. The take profit is placed at reward ratio times that risk distance, 1.5 by default. A short trade is the precise mirror at a shallow rally. Only one position runs at a time, and the structural stop and target manage the exit. Let's read through the actual MetaQuotes language code you see on screen. At the top are the input parameters, the dials you can tune in the strategy tester or on a live chart. TrendLookback sets the half window length. A larger value demands a more developed trend before the EA will act. EngulfFactor controls how much bigger the signal body must be than the bar it engulfs, so raising it makes the engulf stricter. MinBodyFrac sets how decisive the close must be relative to the candle's range, filtering weak, wicky candles. MaxRetrace defines how shallow the pullback must stay. Lower it, and only the tightest dips qualify. Stop Buffer Frac adds a cushion beyond the signal extreme for the stop, and reward ratio sets the take-profit distance as a multiple of that risk. Now the signal logic. The variable uptrend is true only when the recent high is above the past high and the recent low is above the past low, confirming structure. For the long, prior bear checks the engulfed bar closed below its open, sig bull checks the signal bar closed above its open, and body engulf U verifies the signal's body fully covers the prior body, opening at or below the prior close, and closing at or above the prior open. The variable dip retrace measures how deep the dip went relative to the recent leg. When every one of those conditions is true and the dip is shallow enough, the EA reads the ask price as the entry, sets the stop loss just below the signal low minus the buffer, computes the risk distance, and places the take profit at reward ratio times that risk before sending the buy order. Let's walk through this illustration because it shows both a long and a short in sequence. Notice there are no indicator lines here, and that's deliberate. This strategy is pure price action, so everything you need is in the candles themselves. On the left, price is climbing. The earlier block of bars sits lower, and the most recent block prints both a higher high and a higher low, so the structure is clearly an uptrend. Then watch the fifth candle. The market pulls back with a small bearish bar, a shallow dip that retraces only part of the recent upleg. The very next candle is a strong bullish engulf whose body completely swallows that dip. Every condition lines up, so the strategy signals a buy entry. The stop loss is tucked just below the signal low, and the take profit sits 1.5 times that risk above the entry. Price resumes its climb and reaches the take profit a few candles later. Now the market rolls over. The recent bars start printing lower lows and lower highs, confirming a downtrend. Around the 12th candle, price stages a shallow rally, a small bullish bar, before a powerful bearish engulf overwhelms it. The strategy detects the mirror setup and signals a sell entry, placing the stop just above the signal high and the take profit 1.5 times the risk below. Price slides down and tags the take profit. That's the continuation idea in action, joining the trend after each brief pause, for educational purposes only. So that's the Engulfing Pullback Continuation Expert Advisor. We covered how it reads pure price action with no indicators, how it confirms trend structure using 2 equal windows of bars, how it waits for a shallow pullback and a decisive engulfing candle to join the trend, and how it sets a structural stop loss and a reward ratio take profit that auto-scale to any symbol. Remember, everything in this video is for educational purposes only and is not financial advice. If you found this breakdown helpful, please hit the like button, subscribe for more MetaTrader 5 strategy analyses, and drop a comment telling me which strategy you'd like me to cover next. You can find more at www.algobot.live. Past performance does not guarantee future results. Trade responsibly.